Welcome to Markets Now. I'm Michelle Rook along with Jim McCormick with agmarket.net. We are seeing grains a little bit higher here after the report at 11 o'clock. And as far as the livestock mixed in the cattle, we're higher in the hogs. So, Jim, let's talk first of all about the report this morning. Corn ending stocks up 25 million bushels and soybeans domestically up about 15 million bushels. Did either of those numbers surprise you?
They really didn't surprise me, Michelle, and the fact that they did get a little bit higher on the carryout. I guess what really surprised me is where they made the adjustments. On the corn specifically, they lowered the ethanol usage while at the same time leaving exports unchanged. Now, exports have been lagging so much. I think you could have justified them lowering the exports, but it looks like they're going to wait and see. The reality is this is the time of year we quit shipping beans and we start shipping corn relatively aggressively. So I guess the USDA is optimistic that we're going to do some heavy lifting and get caught up on these sales. The ethanol number, when you miss those crush numbers and they miss them over the last couple months, it's going to make it harder to make that up. And it seems like the USDA recognized that today. The beans, they also made slight adjustments, but definitely nothing too shocking.
Yeah, I guess the only surprise there was that while they left exports unchanged on soybeans, we did see a little bit of a decrease in the crush rate, which is a little surprising from what we have heard and seen about what's going on out there in the soybean processing industry.
Well, there's no doubt about it. I mean, the processor has been making a lot of money. So, yeah, I guess you could make a great point. That was a surprise. Maybe that tells you how nervous the government is about where we're going to be, not here in February, March, April, but as we get in the latter part of the year, there's not going to be a lot of beans around to crush. So maybe that's what the government's looking at. I would guess, Michelle, there is a point somewhere down the line that we may be importing beans from Brazil, or at least some meal, because that balance sheet is going to get tight, even with a slight uptick in ending stocks on this report.
Yeah. All right. Let's talk about South American numbers, Jim. They left Brazilian corn unchanged at 125 million metric tons. Soybeans unchanged at 153 million metric tons. The bigger surprises came in the Argentina numbers. Dropped Argentinian corn by 5 million metric tons and soybeans by 4.5 million metric tons. And that was more aggressive than we kind of thought they were going to go, right?
That was million and a half lower than what the average trade gas was on the Argentina crop. It was within the range of expectations, though. So we kind of had a muted response to at least begin the trade, and we seemed to cart ourselves a little bit. These numbers are still quite a bit higher than what the private estimates coming out of South America. So I would, that's typical what happens, Michelle. The government tends to slow walk it. Our government, at least, the private estimates get a little bit more aggressive. I would guess unless something, changes dramatically, the crop will get a little bit smaller. If the weather holds, I don't think it's going to fall to bed. Right now, there is some rain in the forecast next week. If that happens, that will hopefully help put a bottom in the size of that crop for them.
So do you think the soybeans and the meal market are trading already these lower private estimates that we have seen or not? Or do we not have those priced in yet?
I think they are trying to price them in right now. And I think you got to be a little bit leery if you're a producer right now holding beans right now. The reality is, the rhetoric of this drought in Argentina, we've been talking about now, Michelle, for what, a month and a half. So a lot of those numbers are dialed in. This is the time of year where exports tend to shift away from the U.S. to Brazil relatively fast. If you look at the FOB prices, we're not competitive at all. I heard yesterday that Brazil sold China over 30 cargoes of beans throughout the spring and the summer, just yesterday alone. So China's been aggressively switching their demand to the Brazilians. And then on top of it, that's be a little bit on the political side. We're still in a trade war with them. They had the whole mess of that balloon last week that just kind of ratcheted up the tension. So it's just one more excuse for the Chinese to move their demand to South America. So the combination of that South America crop maybe starting to get some very meaningful rains. The rhetoric of we've talked about this drought forever. There's a very good shot. A lot of the bullishness is being priced in as we speak, and there may be more risk to the downside than upside at the moment.
Right. We also got Brazilian numbers out this morning from CONAB, though, as well. And now we're right in line, it looks like, on soybeans, but we're still above, USDA is still above where they are on corn, right?
That's where they're at. The corn, we'll see where it's at. We got to keep an eye on it. The safrinha crop's the big crop. They're just getting it planted as we speak. They're a little bit behind schedule. By all accounts, that's not going to be a huge problem if they can get it going. What we're fearful of, what we need to keep an eye on, if they can't get that crop in, Michelle, on a timely pace, It gets planted later. It gets pollinated later. They run out of water as the the rainfall season shuts it down a little bit too quick. So we need to keep an eye out. But the government still right now says they're going to have a big crop. I think you got to plan on that at the moment. Something I was a little bit surprised. I thought there would be a shot they'd raise that bean crop in Brazil a little bit higher to kind of offset the Argentina crop. And I still think that could be in play down the line as that crop could get a little bit better. As a whole, they've had some pretty good weather down there.
That's right. Do you think going forward that the lower safrinha corn crop, if we can't get that planted, is that the one catalyst that could finally push corn out of the top side of this trading range that we've been in?
I think that is one. I think that's probably the one that more than likely could happen, because essentially what we faltered a little bit on the export demand is we're just not getting exports, and part of it's we're not getting China demand. China has bought a lot of corn from Brazil here the last couple months for the first time ever, and I think they're kind of holding back, hoping to be able to buy a little bit more of that safrinha corn crop. So if that safrinha corn crop starts to falter for whatever reason, it's, I believe, going to force China's hand and get a little bit more aggressive buying U.S. corn, which will hopefully break that market, get us back above that $6 level. So a lot of it's going to hinge on that weather at this point in time in South America.
All right. We really did not see much fodder for the bulls or the bears there. So what is the wheat story that we're trading today?
Right now, the wheat number was a dud as anticipated. I think, Michelle, what we're going to do is go right back to geopolitics. Overnight, Putin was complaining to anybody who would listen that that essentially the Ukrainians were selling wheat to the wrong people. They're selling it to the Europeans. He wants them to sell it to the African nations. He's also a little bit honked off because the world's really not buying a lot of his wheat. They're buying some, but there's a lot of other political, money issues with their banks that he's complaining about. So I think there is a real risk potentially that the market's not pricing in at the moment that Putin could shut down that grain corridor. Remember, we are now sending tanks to that part of the world. Europe's sending tanks to that part of the world. So unfortunately, the tensions are probably going to ratchet up. And if they ratchet up, you could see some kind of war risk premium come back into that wheat market and maybe a little bit of the corn market as well. Because remember, Ukraine is a big exporter of corn.
Okay. Livestock, just quick there. We're not going to spend much time on livestock, but cattle market made new contract highs yesterday, and then we saw some profit taking. Front end of the boards trying to recover today. If we get higher cash trade this week as expected, Jim, can we keep that market going into contract high areas?
I think we can. I mean, for the cattle market near term, it's all about the demand. We know the supply numbers are tight. They've been tight forever. They're going to get tighter. The question is, can they get the consumer, or can they get the processor to pay for it? That higher, so the cash market goes up, that should support it. I am a little bit leery, at least near term, though. You could see some unwinding of the cattle pork spread. If you look at the hogs, they have been getting absolutely creamed recently. They look like they're maybe finally trying to put that bottom in everyone's been looking for. So you might see some of the traders that are buying cattle, selling hogs. They may unwind that spread a bit, Michelle, which could allow the cattle to weaken a little bit and hogs to firm up.
Okay, good point you make there. Thanks so much for joining us, Jim McCormick with agmarket.net, and that's Markets Now.